Hello everybody, welcome to the technical analysis webinar. My name is Troy. I'll be leading the presentation today for AvaTrade. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me okay and seeing my screen all right. Okay, great. I've got enough responses. Looks like we're up and running fine. If anyone runs into any issues as we go along, please don't hesitate to let me know. As always, keep in mind that no one trade is guaranteed to profit. That's why you should manage your risk in some way that makes sense to you in terms of trade size and whether you use a stop loss or maybe a backup trade as a hedge. Maybe you're using AvaProtect, using the AvaGo mobile app. It's a unique way to protect against losses for defined time periods. So there are different ways to manage your risk, but understand there obviously is risk with any trade. There's also obviously the possibility of nice profits with each trade as well, which is why we're all here, trying to find the best way to go after those profits. What we cover in the webinars, keep in mind, is not meant to be financial advisement, but is coming from an educational perspective to help you understand how to use different tools and different sources of information to hopefully improve upon your trading strategies and your P&L at the end of the day or the end of the week or the end of the month. Daryl, if you're not seeing your screen, you just need to check your setup. Maybe you need to expand a box somewhere or something. Most everybody's up and running fine. So I think it's something on your side why you're not seeing the screen. Okay, so just check things there. Okay. Daryl, what are you saying, NVM? I'm not sure what that means. Okay, so we'll move on. Daryl, keep me updated with what's happening with you there. You can see our full risk disclosure statement, by the way, on AvaTrade's main website. Now, keep in mind what technical analysis is. As we get onto the live charts, we'll be taking a look at what's happening on my demo. As you see the live movements, understand that when we're doing technical analysis, we're looking at the historical movements on the chart, looking for some kind of clue as to what might happen in the future. Now, obviously, the history is no guarantee of what will happen in the future, but many times you can find repetitive patterns. You can find price levels that are important historically for either breakthrough moves, for reversals, what we call lines of support, resistance. You can recognize different patterns of trending or ranging. And many times this can be useful to help you determine maybe opportunistic spots for entry points and exit points into trades. And so a lot of the technical analysis is done manually, especially in the webinars that I present, meaning we're drawing our own lines, we're finding our own price levels, we're deciding when and where maybe you might prefer, you're deciding, or I'm giving examples of where it might make sense to enter and exit based on price levels and trending and those sorts of things that we see. Other options are use indicators. We've used, for example, Fibonacci levels to try and confirm or find exit and entry points, important price levels that make sense. And indicators can be part of your technical analysis to help you decide when and where you want to buy or sell, get into, get out of trades. And so we'll go through those types of concepts as we go through the webinar. Please don't hesitate to ask questions, give input, suggest assets, and that can help us in terms of the topics being relevant to what you want to see and answer questions that maybe I'm missing that you need to know. Okay, so you can contribute to what we're doing here as well. Just to take a quick look at the fundamentals of what's been happening today, and also I mentioned the AvaTrade Go mobile app and the fact that there's a way to protect trades with a feature called AvaProtect. If you go to trading platforms, you select AvaTrade Go, you'll see this is our mobile app. You can download it to your mobile device from the appropriate app store. and it does a lot for you. It's like a trading calculator built into the order window as you're setting up your trade. So you don't have to guess. The margin requirement for whatever trade size you pick, it tells you in your account currency how much is required for margin to open the trade. It tells you if you put a take profit, how much you would make to that take profit mark in your account currency. It tells you if you put stop loss, how much you're risking to that stop loss mark in your account currency. Okay, great, Daryl. I'm glad you're all set up. If you choose the AvaProtect feature, it's available on gold, silver, pretty much all the FX pairings. If you choose protection for a certain length of time, whether it's 1 hour or 1 day or 3 days, for a flat price, for a premium price, you're protected against any losses during that time period. Okay, it's like an extra level of protection beyond the typical ways of protecting trades. And so that's an option for you using the AvaGo app on a lot of our assets. So keep that in mind. And if you need any help with the app or the features on it, talk with your account managers. They're happy to help. And in terms of the fundamentals today, positive start today on Wall Street and around the world. There's a positive hopes about the vaccines that are being developed. There's positive reports that came out today about some of the trials being fast-tracked and approved. And it's looking like there's probably going to be a vaccine by the end of the year, and hopefully sooner. So Wall Street likes that, and so do the markets in Europe, and so do the markets in Asia, and all around the world. And so vaccine hopes, and these are vaccines that are being developed in different places around the world. If you look, a German biotech firm, Pfizer, and other places. So positive news there. And then we've got earnings season, and there were some positive numbers that came out on a couple companies. Okay, and so this is starting the week off with momentum. We see everything's green. The quick snapshot of the markets, the futures are green. The market opened green on the non-futures assets, and the US dollar's dropping. You might say, well, there's positive news around the world, and for the US, why is the US dollar weakening? Because people were running to the US dollar when they were nervous. So if they're not nervous, they're buying back other assets that they deemed more risky. Now maybe they have the confidence to buy them back. So the US dollar as a whole is weakening against other currencies. All right, you can trade on the dollar index, by the way, on our platform. It's a basket of currency pairings with the USD paired against other currencies, kind of a weighted average that you're trading on, Euro USD, GBP USD, etc. And so positive momentum, we see that right away in the fundamentals. If we look at the economic announcements, not much going on, nothing negative. They're all as expected or better than expected across the different countries, economic announcements that came out. And then we've got an FOMC member, that could be important, talking later today in the US. Those are the folks who decide monetary policy in the US. So yeah, sometimes they can put a damper on momentum depending on what they say. So you have to be prepared with your technical analysis for potential reversals if one of the FOMC members, in this case Williams, if he has something negative to say. The markets do listen to those folks. So those are some things to keep in mind. Not a whole lot going on fundamentally, but some important news, some important momentum. So now as we go to the live charts, we can have some ideas about what's going on. Oh, and by the way, I forgot to show you. So if we go to AvaTrade, we go to trading info, it's earnings season, something you should pay attention to. Earnings season, that means corporate earnings are being reported. Any publicly traded company has to report earnings, typically quarterly, okay? And so this week are the big banks, Bank of America, Citigroup, and some others, Barclays. And so as you look through here on our website, you can see the exact date that the earnings are expected to be released, okay? So you can prepare in advance for, some of them already were released late last month, some are late this month, some are in a couple days. So as you look through, you'll see the different dates. And some of these stocks are only on MT5. We have I don't know, a couple hundred more stocks that were added on the MT5 platform. Anyone can add that in your client area, and you can have it in addition to MT4 accounts. And so all kinds of stocks, lots of earnings numbers coming up, a lot to choose from. And like I said, some of the big banks have earnings coming. And so I pulled up some select stocks that are coming up in terms of earnings numbers, and we'll take a look at the technicals on them. And so here we are. I've got Bank of America, I've got Citigroup, I've got Barclays listed here, and I've got oil. And so this is interesting what could happen with oil this week. If there's a lot of momentum, and let's start with oil because it's been very interesting and really it's been very easy to trade of late in the past weeks. If we go to one-day candles, again, I know some of you might be tired of looking at this, but boy, it's worked well. I never get tired of winning, I know that. Here's the top of the gap from when oil made its big plunge. If you remember, when oil was already downtrending, there was an oversupply of oil, and then there was a trade war between Russia and the OPEC nations trying to outdo each other with upping production because Russia didn't want to cut production and OPEC didn't like that. And they said, okay, fine, we'll up production. And boy, that plunged oil prices. In the midst of a pandemic, this happened with a price war on oil. It hurt Russia, it hurt US shale oil drilling, which has a lower profit margin at these low prices. And so here was the big gap down with that bad news about price war on oil, and it hasn't broken back to the top of this gap yet. Once it entered the gap, right down here was the bottom of the gap. And by the way, the gap occurred from Friday's close to Monday's open. That's typically when you see those types of gaps, when news occurs, big news occurs through a weekend. And so looking at that gap, we've been watching this for weeks and trading on the fact that with a buy stop just into the top of the gap, typically those who use the technical analysis strategy of trading the gap, when the gap gets entered or breached, it tends to try to fill the entire gap, which it did the first time. And once it got to the top of the gap, that's the first resistance level. So the idea was to trade down. Once it hit the bottom of the gap, that's the new support level once it broke into the gap. So you trade up from the top of the gap, once it hit, or from the bottom of the gap. Once it hit the top of the gap, you're trading down. Okay, and it went almost halfway down, now it's come back up. Okay, and so you didn't get a chance to trade up from the bottom of the gap again because it didn't reach the bottom. Now the question is, what do you do next with oil? Okay, and by the way, with each of these times that it was challenging and folks were trading down off the resistance, guess what kind of pending order many also set up above the resistance in case it broke? What kind of pending order is going to buy if it breaks this resistance? Because it's going to take some momentum to break the resistance on the top of that gap. If it breaks that resistance, what kind of pending order buys for you from up here? If we wanted to put a pending order that if it breaks this resistance, buy if it hits that price, let's say here, that's a buy stop. Good, Mubarak and others. So you don't have to know why it will break. What we do know is it could break. And according to technical analysis strategy, the longer standing a resistance level in this case, or support level has been standing, the longer it's been there and not been broken, the more times it's been tested and not been broken, it really takes a lot of momentum to break it. And when it breaks, you have the potential for a huge breakthrough candle. A breakthrough candle is like this one. When it first broke into the gap and gap down, look at the size of the momentum before the market closed that day. That's a breakthrough candle, okay? If you get a breakthrough candle here, where's the next resistance? The next major resistance on the one-day candles is up here. Okay, we're talking 47, 48. That's a lot of price climb. If it breaks through and you entered at 42.5 or so up here, that you could get out at 47.5, and that would be before the resistance. That's $5 whole potential climb per barrel. You know, one lot position, that's 5,000 potential profit with a simple pending buy stop. And look how nice this buy stop would have worked out, and this sell limit, and this buy stop. And this sell limit's the first one that got cut short. So you'd have won 1, 2, 3.5. You'd still be in profit on this one. You would just have to decide whether you want to get out early or not on that one. So if it breaks through, you could have a pending order up here at, say, 42.6, something like that, ready to buy. Where might you put your stop loss with this technical strategy? Because it's not guaranteed to win. If it breaks through and reverses back the other way, where might you have your stop loss to say, okay, I was wrong, and take a limited loss? Back below what? Yeah, back below the broken resistance, right? Type okay if you're with me on that. If you understand why, if you entered on a breakthrough, if the pending order opened here, a buy stop buys from a higher price, why it would make sense to have your stop loss below that level then, because it should become support at that point. A broken resistance level becomes support. And you think, wow, this looks too easy. Just put a simple pending order and that's it. What is it that's happening this week that we just looked at that could cause a ton of momentum? Earnings season, right? Big banks are having announcements. Look what happened to Tesla today. We'll take a look at Tesla. Talk about big movements, okay? I've got a guy that specializes on Tesla. He's trading on it all the time. And, you know, these movements on some of these assets can spur momentum on others, right? What if and there's no guarantee this will happen, the earnings for some of these big banks could be bad, right? In which case, maybe that would spur oil to drop. What if the earnings reports are really good for some of these big banks and other earnings reports that are coming out this week? Because it's not just the banks. So earnings season, Daryl, is quarterly, okay? 4 times a year, every quarter, January, February, March, so around March, right? April, May, June, around June, or July, August, September, October, and that's the next quarter, and then at the end of the year, right? So 4 times a year, publicly traded companies like Bank of America, like Citigroup, like Tesla, etc., they have to report earnings, okay? Showing what was their revenue for the quarter, what is the value, their earnings per share, etc. And this affects stock price and momentum and can affect the entire indice that they're found in, okay? So, and it can affect other assets. What do you think happens to oil if some of these earnings numbers for these big companies this week are better than expected? What kind of momentum might that give for oil? And you have to think about, okay, so maybe I want to put a pending order. I go, and not just on crude oil, right? Also for the major indices, NASDAQ, S&P 500, Dow Jones, the DAX, the CAC, the Nikkei. This is a global economy, okay? As these earnings reports come out for European companies or for US companies or for Asian companies, it doesn't just affect the local stock market, it affects globally most of the time. It's a very global marketplace now. So you could see crude oil affected by positive or negative earnings numbers this week. You could see gold affected. You could see the indices affected. European indices, US indices, Asian, Australian, etc. Okay? So, and I say could be, I almost would say you will see momentum created on these assets from all these earnings reports that are coming out. Now, do you have to follow each exact earnings report? You don't. You can set up trip lines in the market, as I like to call them, with pending orders at specific locations that you know there had to have been strong momentum to trigger those trades. Okay, so if I want to do oil, I switch to pending order. I go to buy stop. If I want to trade on a potential breakthrough on oil in case it breaks through this resistance, then maybe I think it could climb to the next resistance level. So then I say, okay, I want to get in at 42.6 as an example. You could pick a different price. You could pick a different direction for that matter. It isn't about guessing the direction. It's about being ready in case it happens. That's what technical analysis is all about. Being ready for movements. So here, and then my stop loss, if I was putting it back below that level, might be back down at 40.9, something like that. And then maybe I'm setting up take profit up at 47.7 just before that resistance level up there. Not to say you couldn't close it sooner, certainly could. So here's my pending buy stop, and there we are. All right, so if I move this line there, now you can see my entry price, right? I had this red line I drew in the way. Now I can move that back where I wanted it. Oops. And so, and that, by the way, with your pending orders, you can change the entry price because it didn't open yet. So I can drag this wherever I want. And so that line, if I deem that as being confirmation that the resistance is broken, then that's where it'll buy. That's my buy stop. And then it would take profit at this line. Okay, let me get rid of this line. And now I can move my stop loss down where you can see it better. Oh, sometimes it takes 2 tries. There, okay. And why am I sliding it down maybe to there? I would want, according to my technical strategy, to get out just before this resistance level, the top of it right here. I might even slide it a little bit lower, okay? There, now it's just before the resistance. So I would take that profit before it might drop off that resistance, okay? Any questions on that setup, that buy stop setup? And by the way, with the AvaGo app, you don't have to know that it's called a buy stop. You can just say buy from and put the price and it'll make it a buy stop automatically. You don't have to know buy stop, buy limit, sell stop, sell limit. It can be confusing. So any questions on that setup? Yeah, we could look at Netflix, sure. A lot of these stocks can gain momentum from earnings season, even if it's not their earnings that are being shown at the time. Okay, eventually they all show them, any publicly traded company, but you can get a lot of momentum, even if it's not the day that Netflix, for example, is reporting. If it's a day that maybe Barclays or Bank of America has numbers that are a lot different than expected, you can get momentum on a lot of the assets, including something like Netflix in response to that, because these large companies, when they have earnings numbers come out, it's a kind of a read on the greater economy, the health of the economy, these major companies, when they show better than expected or worse than expected earnings numbers. And honestly, you can't guess necessarily what they'll be. You can prepare in case they're better than expected with a buy stop on oil, right? Or we could set up the same type of setup on S&P 500, right? The same type of setup on the DAX, on the Nikkei, etc. Okay, same concept. Any asset that you think might gain momentum from positive or negative earnings, you could go ahead and do that. And by the way, what if you want to set up for a potential sell on oil? Well, it's below the resistance, right? It's below the resistance. So you could even do a market sell if you think it would drop. I don't like the idea on that because I want confirmation of some kind of momentum. And right now, the confirmation would be if it broke the resistance. If you think oil should drop, by all means, sell off that resistance level. You could put your stop loss right above it and you don't have to risk much. A lot of times, the third or fourth time that a resistance level gets tested, you can see a breakthrough. And you see it was tested once with oil, tested twice. It tried to reverse and didn't even make it down to fill the gap this time. And it tested it a third time. And it's like oil is just waiting for a reason to have a breakthrough. And maybe that reason will be this week with these earnings numbers coming out with some major banks and companies. So, you can have your trip line up here just waiting in case something breaks oil up. I think technically speaking, it's a nice setup. Small risk, much larger potential reward. And by the way, if we look at the account history here, look at some small losses. We did some sample trades last week. We lost 53, we lost 62, we lost 280, we lost 95, we lost 40, purposely doing short stop losses as a strategy and having longer potential profit. Look at the profit. almost 2,000 on Boeing, right? So the point here that I was making with some of these trades last week is you're trying to catch large momentum. And in this strategy, we could be right once out of 5 tries on different assets, and we profited, right? If we look at last week's trades, 1,500 profit last week. The win percentage, I think 2 out of 8. And the whole point was there's more than one way to trade, technically speaking. You can trade where you're close to the support or resistance level and risk very little, and set it up that the one that maybe wins has a much larger potential profit, like the example I just showed you. Or you could set it up different, where it's 50-50 distance. Same risk, same reward. Then you'd have seen more of these profitable, right? Wouldn't have been so many losing and just 1 or 2 winning. Okay, so there's different ways to set it up, but you can profit in more than one way. And this is an example where purposely we were saying, wow, it could hit that, no problem. But you know what? I'm not risking much. I only need one of these to come through. And boom, there it went. Okay, just an example. So as we're setting up oil and we say, couldn't it break through, trigger, and go back down? Of course it could. And it can do that 3 or 4 times, and you could be right once and profit with this type of setup. Another way to set up is the opposite. You could say, no, if it breaks through, I'm in this for the long term. My stop loss is down below 2 support levels, further away than my take profit. Okay, then it eliminates the false signal where it breaks through, comes back, goes up, comes back, and you're in it for the long term if that's what you believe in. In that case, risking more to make less. And most likely your win percentage goes up that way, but when you lose more than you win, right? There are different ways to profit. There's not just one way. This setup, I think, is nice because of the strength of the look of this resistance level, that once it breaks through, I like a small risk to the underside with a larger potential profit, like the Boeing move. Okay. All right, so let's take a look at, someone requested Tesla, was it? No, Netflix. Someone requested Netflix. We'll look at Netflix in a moment. Let's do it now so I don't forget. Netflix, there's Tesla. By the way, I just want to quickly show you Tesla. Pretty amazing what's happening with Tesla. Look what Tesla did today. Okay. Let's get off 1-day candles, 1 hour. Okay, it gapped up huge. Now it's filled, it's come back to the gap. You see that? A strategy is the top of the gap is a support level. So by the way, anyone who feels bullish on Tesla, that's a sign that it's bullish. You could buy off of this. You could do a market buy on Tesla, right? It pulled back to the open price, which technically speaking, a technical strategy is if it doesn't re-enter the gap, then the top of the gap acts as support. And it just confirmed support. It gapped up to here, it climbed further, it just pulled back down to the top of the gap and bounced. Okay, so a strategy would be buy, and your stop loss is if it re-enters the gap, you're out. And then your backup move is if it re-enters the gap, you have a sell stop ready to go with your take profit at the bottom of the gap. Okay, and that's a huge amount of move that it did. You know, Friday it closed at 1548. It's at 1700 right now. Talk about a huge price move. My goodness. Okay, so really nice support level here, nice gap to work around. Buying off of here, your first resistance, if you did a market move, is here. And your first support levels here would be the underside. Okay, very interesting, huge momentum. Tesla has just been knocking it out of the park, whether it's with their cars lately or with their partnership with NASA in the US. They just put astronauts in the space station recently. Okay, really strong company of late. All right, let's look at Netflix. And what you should be noticing is we're combining technical strategies along with fundamental news that you think improves your likelihood of that technical strategy coming to fruition. Okay. Where is my Netflix? We will find it. I'll do the search feature. So you can either use the AvaTrade Go app, which was the Meditator 4 interface, and you actually also Tesla, Facebook, Boeing, Google, Apple. Yeah, I have some folks asking about price alerts in the AvaGo mobile app. You're able to set price alerts. Absolutely. And then you'll get a message informing you when that price is hit. Why am I not seeing Netflix? Here, I know what I'll do. Let's do this. And this is a good lesson for everyone. Do hide all. Okay, it only leaves the ones that you have charts open on. Then go to symbols. I should have just done this in the first place. And you go to the category that you're looking for. So we'll look for stocks. CFD stocks US. Okay, alphabetical order. There's Netflix. I click on it and click show. And now here it is. That was simple, right? All right. So there's a lesson for anyone who is struggling exactly like I just was. And that's actually a good thing. We have so many assets on our platform, especially stocks. If you're on the MT5, you really need to know how to do a search feature. The MT5 actually has at the top of the Market Watch a search function. Makes it easier. But the MT4 works just as good to go to symbols and do exactly what I just did, so that you don't have to search and search, because we really do have a ton of assets to choose from. And sometimes it's hard to find it in the list, exactly what I was just doing. So, all right, Netflix, here it is. And we're looking same as Tesla, right? Gapped up. Why's Netflix been doing so good? What do people do when they're in quarantine? When they can't go outside, when they have to stay home, they watch a lot of movies, okay? So, and by the way, some companies that reported today that sell snacks, salty, sweet snacks, that sort of thing, their revenue was up as well during the pandemic months. And so it's interesting to see which companies are benefiting. Look at this momentum. So again, we've got a gap. You could trade a strategy with the gap. That your stop loss is just below the gap. If it enters the gap, you get out. Your take profit could be up here. Now that's about a 50-50 strategy. Remember I said you don't always have to have a larger distance for potential profit compared to risk. This is about a 50-50 risk. You could say, wow, there's a lot of positive momentum today. I think it's more likely that Netflix will hit this resistance level before it breaks the support and drops into the gap. If that's what you think, you could buy now, right? Same risk to your stop loss below or at the support compared to potential profit at the resistance. If you say, no, I like better entry points, then what kind of pending order could you put down here on the support level right down here to buy? What kind of pending order would buy off the support? And then you're risking less if it breaks the support to your stop loss. This is the MetaTrader 4 platform, Mubarak, but they look the same. Honestly, MetaTrader 4 and MetaTrader 5 are 99% the same. Like I said, the MetaTrader 5 has some upgrades, small, like there's a search feature in the Market Watch in the MT5. Yeah, exactly, buy limit. Many of you are answering my question, thank you. It's a buy limit. If you wanted to buy only if it comes down to the top of this gap from where it opened today, you could put a buy limit here. And if it drops, great, you got a better entry point than buying now. And if it doesn't drop and it just climbs and breaks the resistance, okay, you didn't lose anything by not trading, right? Some are more patient. I tend to think it'll probably challenge that resistance up there before it would break the support. But obviously I could be wrong, right? I'm not telling you that's what will happen. I'm saying that's what I think probably will happen based on the fundamentals today, on the positive momentum we saw. But you certainly could prepare if you think there'll be a big swing in momentum. What kind of pending order could you put down here in case you're wrong? Let's say you have a buy limit here. You set up a buy limit on this support because it looks like it might want to test it before it climbs, potentially. If you have a buy limit here and it triggers a buy and your stop loss is down here, what could I back that up with in case it breaks the support, I lose on my buy limit, it hits my stop loss, I get in on a sell to fill the gap potentially to the bottom of the gap. I'm backing it up with a sell stop pending order, okay? A very common technical strategy. Trading up from the top of the gap because the top of the gap should be support, just like it was here. This is the top of the gap. It tested it and bounced up exactly like you'd expect. You could have already profited once trading up off the top of the gap. It gapped up from Friday to today's open to here. That acted as support exactly as you'd expect. Okay, and it bounced. That was your first shot to profit on this. Okay, too late if you didn't do it yet. You could still trade for it to climb to the resistance if you like the market move. If you would want to buy, but with a better entry point, you put a buy limit down here. Stop loss maybe below the support. If it breaks the support, closes out potentially your buy limit, then you have a sell stop you could have ready to go. So in this example, you don't have to be right to profit. You just have to be smart. You could set up a buy limit, be wrong on that, hit the sell stop and be right on that. That's only 50% accuracy, but your potential profit from here down to here is more than what you risked from your entry on your buy to your stop loss. Okay, so you've got the first move that you think is in your favor to buy off the support. If you're wrong, you back it up with the sell stop, both of them with limited risk. Remember the Boeing trade I showed you? Had limited risk, you could lose both of these, but maybe you win on the oil. 1 out of 3, you say, well, that's not a good percentage. No, but if you profited, isn't that nice? That 1,500 profit I showed you for last week, that was nice, right? So sometimes it's not about being right. It's about being smart. And some technical strategies are set up for entry points that are opportunistic on price levels that allow you to risk a lot less than the potential profit it can bring. So that's one way to do things. And that's kind of the way we're looking at right now. So you see this coming down. I thought it might challenge that support again. It looked like it was trying to reverse. So buy limit from the support could be nice, backed up by a sell stop. I think that's a nice setup for Netflix without having to pick one direction. Okay, purely technical strategy. All right, so what other requests did we have here? I don't see any other specific assets. Oh, VK, French stock. Let's take a look. Symbols. And I don't know if that one's on MT4 or just MT5, but we'll take a look. Let's go to the stocks Euro. We should have some stocks that are not US. Here we are. I've got Vodafone. I don't have anything else with a V. What's VK? What's the company name for VK? You're giving me the trading symbol. What's VK? Yeah, Patrick, we'll take a look at gold for sure. Valoric. Okay, let's look for it. VVVVV. I don't see it listed. I think it's probably on our MT5 platform, which I don't have open right now. So you'd have to check it out on the MT5. I apologize. So let's take a look at gold. Since that was requested, I'm just going to show all. I'm going to bring back all my assets. And let's find gold. Okay. Gold lately has been following the markets. And what I mean is, as the markets were climbing, gold has been climbing. And as the markets are dropping, gold has been dropping. And a lot of that is related to the strength of the USD. Since the US dollar is paired, gold is paired against the US dollar. The indices are paired against the US dollar. As the US dollar weakens, indices rise easier, and then so would gold, right? And so it's interesting that with good news and markets rising, gold has been rising as well. And so it's usually not the case, but that's what's been happening. So we're looking at gold. I see on the 15-minute candles a bit of a resistance here. It has not hit it yet. I think it'll test it. It could just drop right now all the way down to maybe the next support, but I think it will test at some point. There's the support. If you were selling on this, this might be a spot to take profit. I believe it will test this resistance and see if it can break it. Now, if we look at 1-hour candles, you see there's a resistance level up higher. This is the resistance I just drew on gold on the 15-minute candles. By looking at 1-hour candles, we can say, there's actually resistance up here. And I think that's a more significant resistance level, up around 1815. Resistance, 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 right? So I think you have the potential on gold to climb up to this resistance level to try and test it. Okay. It obviously could pull back, but I don't think it's necessarily done testing the resistance on the way up today. Yes, Mubarak, I understand. VK is a company in France. We got the full name. It's not listed in the French stocks, in the European stocks. Okay, so I'll take a quick look down here if you would like again. Just looking for, here's VK. Good, here it is. So I'll bring this over as soon as we, there's probably a second folder for European stocks that I didn't take the time to look in. So if we look at 4-hour candles, one day candles, 1 week candles, there's no resistance in sight on gold. Okay, so if gold breaks past and 1 month candles, now we find resistance. The next resistance, if it breaks that 4-hour, 1-hour candle resistance, is way up at 1900 plus. Okay, so as you look at the 1-hour candles and you say, okay, it could challenge this resistance level, you understand if it breaks this resistance level here, there's not a major resistance level for, about another $100 per ounce. Okay, so you could think about shorting this if you want and having a stop loss above this resistance. If it breaks this resistance, you could see a large run on gold, which means a buy stop above this resistance up here someplace once it's clear and you believe that it's a solid uptrend past that resistance, might be a high potential move. Okay, something that would potentially make sense to get in with a buy stop above this resistance, small risk back down, large potential profit to the next resistance level, about $100 up per ounce. Okay, could see some big things with gold if it breaks this resistance level up here. Okay, so let's look at the French stock here. 4-hour candles, 1-day candles. I don't know. I think there was a stock split. Looks like there was a stock split. When you see a change in price like this, okay, some companies go back and actually the reverse of a stock split where they decrease the amount of stock. So, the value of one, 10 stocks becomes the value of one stock. If they reduce the number of shares, I should say, not stocks, they reduce the number of shares, which happens. Some companies decide to do that, and then it jumps the value of their individual stocks up by reducing the number of shares. Something like that may have happened here with this jump, okay? So it's not a natural jump in price. Now, if we look at the current movements, we see a decrease in this stock value. So this does not look like a strong company to be buying on. It looks like a company that could continue to drop. Now, I see it's trying to return to a support level that I see down here. Let me get rid of some of the lines on this chart. Let me get rid of these. And the opposite can happen as well, by the way, where if there's a stock split and you get more stocks, more shares from what used to be less shares for a stock, then the value drops unnaturally. Okay, and that doesn't give you P&L. Stock splits or stock combinations where the number of shares change in the company, those price jumps are, you could kind of think of those like rollovers where the price change is not real profit and loss. Okay, so ignoring this huge gap from here down to here, which looks like some sort of stock combination that was done, I see a natural support level here and here. Okay, it just reached that first support level. You see here? Okay, it's trying to return to the gap price. Okay, remember we say you can trade the gap? Well, look exactly what happened. It's trying to fill that entire gap. It didn't yet. It did not return to the opening of this gap here, from the price here up to here. It's almost there. It hasn't reached it, but it did reach the first support level. So if you like this stock, if you think it could rise, okay, Mubarak, if you think you like the idea of getting in on this price after all this dropping, so you could do a market buy, and you've got 1, 2 support levels that if you put your stop loss below both of these support levels, okay, those are pretty solid support levels. And if it enters this gap, then that might be a spot you'd think about, technically speaking, that maybe you'd want to get out. Now, how much would you risk? Depends on your trade size. But you've got 2 support levels to back you up. If you get your stop loss down here, many times I like to do that, to have not just one level, price level that needs broken for my stop loss to get hit, but 2 price levels, kind of widening the strike zone. The opposite of the strategies we were just looking at, where it's a very short distance to the stop loss. But because this is a different circumstance, I like the idea of widening the strike zone potentially, stop loss below 1, 2 support levels. But the fact that your stop loss is further away because it's below 2 support levels, if you don't want to risk more, then just take a smaller trade. You still don't have to expose your account to more than you want. And if you wanted to sell, you can. If you think it's going to fill the rest of this distance back to the top of this gap, by all means, sell. Now, in that case, I probably would do a sell stop if it breaks this support, because it's right on the support level. So if it breaks this support, if it breaks through, that's the spot, technically speaking, that now it should drop to the next support level according to support and resistance. Okay, let's take a look then. I have some requests for some different assets, and we can't look at everything. So let's look at GBPUSD, and I think we'll call it quits for the evening, okay? And I apologize if I didn't get to everything. Let's go ahead, GBPUSD. And again, a lot of these setups, keep in mind, is because it's earnings season. That's what we talked about in the beginning. All these big banks with earnings coming, it really could move the markets this week. So setting up pending orders like we're showing for breakthrough moves or market moves now for big bounces or big reversals, I think you could find some that will pay very well. Okay, and you still can profit even if you lose on a few. Now, you just have to pick your spots, right? You have to pick the ones you like and put the risk tolerance that you have. All right, so the USD has been weakening with good economic news. Today is positive momentum on the markets. We saw that. NASDAQ reaching all-time highs again, etc. So if we call this a support level, this was resistance, breakthrough, support, and it came close to testing this support again. So a natural spot to trade, if you're looking at the fundamentals, US dollar index is down, okay, and it's been dropping with positive momentum on the markets lately. So GBP to go up against the USD makes sense fundamentally right now. And you've got a nice support level here. So if you buy on the pound against the USD, either market move now or a pending order, a buy limit if it reaches the price you like. And then your stop loss can be just below this support, or as I said, I like to do many times, below 2 support levels if I was buying on this. So it would have to break this support and then the next one. This is your next resistance. Breakthrough became support. So my stop loss might be, here I'll draw a third line. My stop loss might be below the second support, depending whether this is a small scalp move or a more patient move, right? So if I'm buying off this support, my take profit might be the first resistance level here, which from here to here is about a little more potential profit than I'm risking with 2 support levels to my stop loss. So I can have equal risk just about to my stop loss with 2 support levels backing me up with an equal amount of potential profit. So you'd have to be really wrong, right? It would have to break 2 support levels before it hits your stop loss. And it's about a 50-50 risk potential profit if you buy from just above this support and stop loss below 2 support levels. Okay. Saeed, you're mentioning Fibonacci retracement levels. You can use that tool for sure to see if the price levels correspond. So here's the Fibonacci tool. So draw a Fibonacci retracement. I click, I say, okay, if this is my first resistance level on the 4-hour candles that I want to look at, I draw the retracement levels down. I say, okay, here's maybe the lowest support or resistance level down here that I want to look at. Here's support, support, breakthrough became resistance, breakthrough became resistance here. Okay, so I've got my price levels lined up, and I say, here's the Fibonacci says this level is more important than the first one. And you see what we did by moving our stop loss below 2 support levels? If you're buying off this support, now your stop loss isn't just below the first support level, but remember I said below this second one, right here is the line I drew to be below the second support level. That gets you below the Fibonacci level as well. So now that might be a second reason why you say, yeah, if I do think the pound will go up and I want to buy from this first support level that I drew, then maybe it makes sense to have my stop loss below this Fibonacci level, which is below 2 support levels that we drew manually. And maybe that improves the likelihood that you're not going to hit your stop loss, okay? Because the Fibonacci levels mean something. They're not just make-believe. They're based on ratios and patterns. And a lot of traders follow those patterns. And the fact that a lot of traders might follow those patterns that Fibonacci levels show, it almost becomes a self-fulfilling prophecy. Whereas because people believe in the Fibonacci levels and they're going to buy or sell from those price levels, it causes the movement to go the direction. If everyone buys at the same time, that can drive the price up, thereby making the theory come true, a self-fulfilling prophecy, right? So if you use those price levels to your advantage, it can work in your favor. And by the way, you might say, I don't even want to buy from this support level. I want to buy from the second support level, the Fibonacci one, where the Fibonacci and the manual support level that we drew, where those agree, that might be the spot that you decide you want to buy from. And if it doesn't hit that price, then you say, so be it. So you could put your sell limit at this support level down here, the second one we drew. And if it reaches it, great. You buy from a better price. If it doesn't and it bounces up early, you didn't lose anything, right? So some traders are more selective, meaning I'm waiting for an even more perfect price before I buy on this. But then you enter into less trades is all, but maybe a higher win percentage. Either philosophy can be okay. Okay. I like the idea of giving myself a chance a little more often with a little smaller trade and have my stop loss below the 2 levels. And that way I'm not risking more, but I'm getting in on more opportunities. Okay. All right, everybody. If there aren't any last questions on this, this was a good one to end on. I think this Fibonacci level combined with this support level looks like a nice spot for a buy limit down here for a potential bounce if you don't trust the first support level. I think it's a nice setup down there. And you don't have to risk much. If you like the move, stop loss below that Fibonacci level could work out nice. A nice potential move there. Obviously, no guarantee, but if you like the setup, you can't win without trying, right? That's the idea. Trust your technicals, have the proper risk management. And by the way, you could put AvaProtect on it as well. The AvaProtect feature is available on the currency pairings. Use our app to open it. You could set up insurance to take a move on this as well once you see a price you like. All right, everybody. Is the price consolidating, you're asking? It looks to me like it's downtrending still. I don't like the idea of a market move on this. I like the idea of a pending order. If you're planning to buy on the pound against the USD, I like waiting for one of these major support levels. This support level in particular. The first support level I'm okay with if you have your stop loss with enough patience below the second support level. But you have to decide what's right for you, right? Not what I'm okay with, but what you're okay with. This looks to me like it could push down further before bouncing. That's what it looks like personally to me. But you decide. Look at the price levels and trust yourself. Eventually, you'll get a feel for how to trust your own price levels as well. Okay, everybody, thank you for joining. Have an eye out on assets like oil and other globally traded assets like the major indices and gold. I think you're going to have huge moves, some large breakthroughs this week because of the earnings. Get your pending orders in early, right? I like the setup on oil. We could set up some on gold and some different stocks, some different assets, and have some huge potential moves this week. And limit your risk, like we were looking at, for what makes sense to you. Okay. All right, everybody. Thanks for joining. We'll be back at it on Friday. Until then, good luck with your trading. Bye for now.